What is up, everyone? So today I want to talk about what I think is the buying opportunity of the decade and how to profit from that. And the opportunity that I see is with oil and oil stocks. So in some of my prior videos, I went over some of the best oil stocks and oil ETFs. But now I want to go into more of kind of why I'm so bullish on oil, and especially at this point in time, why I'm so bullish on oil stocks and oil ETFs. So last week, EIA came out with their weekly oil report, and we drew by 5 million barrels of oil, which is pretty significant. They were expecting a build of 1 million barrels of oil. And this is pretty significant actually, because about 3 weeks ago, we finally went underneath the 5-year average for US crude storage. And that's a pretty big deal because, we've been oversupplied for the last 3 years really with crude oil. And that's why you've seen oil go from $100 a barrel down to all the way to a low of $28 a barrel. And that's also why you've seen oil rally from 28 all the way up to 65 to 70 bucks a barrel, because we are seeing crude stocks finally start to draw down. And it's actually very significant that we crossed below that 5-year average line. I think we're really going to start to see a lot of investors wake up and really start to rotate over into the energy sector. Really for the past decade, you've seen investors pretty much only in the tech sector, and that has been the sector that's really outperformed. But I think really going to next year, well, really this year and going into next year, you're going to see a lot of people start to rotate out of the tech sector, which you've already seen the tech sector really sell off the last 2 weeks, and start to rotate into energy. Just because the supply and demand is finally starting to even out. Last 3 years we've had a massive oversupply, and we're finally drawing those stockpiles down. And this presents a great buying opportunity because demand has been growing about 2 million barrels of oil per day per year. And that's pretty significant because OPEC demand or OPEC supply has been pretty much constant really for the last couple decades. It fluctuates here and there, but as far as what more they can produce, they can't produce much more. And the U.S. is making up for most of the supply gap. But there's only so much that we can produce. Right now we're at about 10.5 million barrels of oil per day, and we're expected to go to 11.2 by the end of 2019, and then we'll start to kind of level out the year after. So really there's only so much that we can produce. Also, Venezuela has really tanked their production all the way from 2.5 down to below 1.5 million. So that's pretty significant. So that's really why I'm so bullish on oil, is because basically supply and demand, we're demanding more every year, and what we can produce is really starting to cap out. We've had record low investment in oil. So I really think you're going to start to see a rip up in oil prices here pretty soon. And what you've also seen is a decoupling of oil and a lot of oil stocks and ETFs. So you've seen oil go from 28 to 45 all the way up to about 70 bucks a barrel. But what you've seen is a lot of ETFs have not followed this run. People are still valuing these stocks like oil is going to be at 40 bucks for the next decade. That's how cheap these oil stocks and oil ETFs are. And that's why I'm so bullish, is because when investors finally do start to wake up as to the oil is going to be 70 bucks a barrel plus for a while here, that's when you're going to really see these oil stocks start to rip up. So real quick, guys, I want to show you guys on my computer just a quick chart of crude oil and also XLE, which is an oil ETF. And just to kind of show you guys the decoupling of these prices. You've seen, like I said, oil go up quite a bit, but XLE has remained pretty much flat. And it's really at its lowest levels, or close to its lowest levels that it's been at in years. Okay, so here we are. We have a chart of XLE and a chart of crude oil. And so XLE is basically an ETF that holds a lot of bigger market cap oil companies. So as you can see, some of their top holdings are XOM, CVX, SLB, COP, Halliburton, Phillips 66. So a lot of pretty large cap oil companies. Exxon is one of the biggest oil companies in the world. So this definitely is a little bit safer of an ETF. There are others out there such as XOP and especially XES. They have a lot of smaller cap oil, which makes them a lot riskier. So these candlesticks, these red and green candlesticks is XLE, and this purple line is crude oil. So as you can see, this ETF has pretty much tracked oil in lockstep, except for the last really 2-3 months. That's where it's really started to decouple, which is pretty interesting. And this is, like I said before, this is where investors are really valuing this ETF and a lot of oil stocks as though oil is valued at really about $40 a barrel. On this left, the left is oil price. It's kind of confusing. On the left is the oil price. On the right is the price of XLE. So yeah, it's valuing it as though oil is about, maybe not 40, but about 45 to $50 a barrel, which is pretty interesting. We can go ahead and compare this to some other ETFs, but they're all about the same. We can go to XOP, which is, we'll say like mid-cap oil. As you can see, same thing happened. It really decoupled from oil price. We can go and go to XES. Same thing, but to even a bigger degree because these are a little bit smaller oil companies, so they're a lot more volatile. But yeah, it's pretty interesting to see how much they've decoupled really in the last 2 months when you compare it to how much in lockstep they've traded. We can go ahead and go back out to a different time setup. This is a 1 year. We can go back to 2 years. And again, this is really traded in lockstep. I mean, even when oil was $50 a barrel back in 2017, XLE was at $78, and right now it's trading at 67. Okay, so this is a 5-year of XLE and crude oil, and as you can see, crude oil was back around $9,200 a barrel back in 2014, before 2014. Before the crash. And this was really about 72, had a high of 101. So this does fluctuate a lot, actually. It looks like this does kind of lag crude oil to somewhat of an extent. I mean, as you can see, from 70 to 100, it really kind of lagged oil back in 2014. But other than that, it's pretty much traded in lockstep. And when you see these, wide margins here where oil is all the way down to 50, but it's trading at 75 XLE, basically what that means is investors really don't think that, or they didn't think that oil was going to stay at 45 for that long. That's why you kind of saw XLE stick around this level. And then until oil really started to go down, that's when investors finally started to sell out of this and, realize that oil was not going to go back up anytime soon. So I think you're kind of seeing the same thing here. Investors are kind of taking a wait and see approach to really see, earnings of oil companies really start to improve and oil really start to stay above $70 a barrel before they start to stick their money back into oil stocks and ETFs. So that's what I think you're seeing here. It's not, this kind of got overbought in the last run up of oil. So really you just saw it, pull back to where it should be. So, I mean, obviously, it's very dependent on what oil does, but if you follow in my previous videos, you'll know that I'm very bullish on oil, and of course this video as well. We're starting to see a turning point in, crude oil storage and supply and demand. So that's kind of why I've been really pretty bullish on oil for really the last year. So yeah, like I said, it's pretty amazing how really oversold and underbought these, ETFs are. My favorite ETFs are, XLE, XOP, XES is a little bit riskier. But I mean, that chart that I just showed you guys is pretty interesting to see just how decoupled a lot of these ETFs have become from oil. Like I said, a lot of investors are valuing these ETFs and stocks as though oil was at $40 a barrel, which we all know it's not. It's been around 60 to 70 bucks for the last month. And from here, my predictions for oil at the end of 2018 are about $80 a barrel, and then from there I think it'll go back up to the $90 to $100 range in 2019. So this isn't really just like a month or 2 month thing. This is a multi-year thing that I think is going to take years to play out. But the good news is that right now is pretty much what I think is the bottom. Who knows, it could go lower, but I think the downside from the ETF side is pretty low because, like I said, everyone's valuing these things as though oil's at 40 bucks and is going to stay there. So I think it's pretty low risk and high reward right now, which is what you want to look for when you invest really anywhere, especially in the stock market. So that's it for this video, guys. I hope you guys enjoyed it. I know this isn't as interesting as talking about a lot of tech stocks, which really gets a lot of the headlines in the news. But this is definitely what I think is going to be the next best investment opportunity, and really the best investment opportunity of 2018 and for the next decade. So yeah, thank you guys for watching, and go ahead and comments down below. Let me know what you think of oil, if you think it's gonna keep going up, or if you think it's gonna go back down, kind of what your price predictions are. So yeah, that's it, and I'll see you guys in the next one.